Good morning and welcome to Dark Gamma's pre-market analysis. It is Wednesday, May 13th, and we are coming in hot with a bullish gap to kick things off. The ESP 500 is trading around 7,425, roughly 24.5 points above yesterday's close of 7,400.96. The tone this morning is constructive, technology is leading the charge, and we have some key levels to watch as we head into the open.
That's right, Samantha. And this gap is meaningful. We are already pressing against the upper end of today's expected move range, which tops out at 7,432. Dark Gamma's model puts the full expected band from 7,369 on the downside to 7,432 on the upside, so bulls are essentially knocking on the ceiling of that range right at the open. That kind of positioning tells us the market needs a catalyst to sustain any further push higher.
And let's talk about Max Pain because it is sitting way down at 7,340. That is a full 85 points below current price, which means options market makers have significant incentive to see the market drift lower through the session. Now, that doesn't mean we sell off immediately, but it does create a gravitational pull that traders need to respect, especially as we move into the afternoon and 0 days to expiration flow picks up.
Absolutely. The Gamma exposure picture reinforces that. Up here near 7,430, we are likely in negative Gamma territory, which means dealers are selling into rallies and buying into dips, amplifying moves in both directions. If we break above 7,432 convincingly, the next question becomes whether there is fresh open interest above that level to anchor price, or if we see a swift extension followed by a snapback toward the middle of the range.
On the sector side, technology is absolutely the story this morning, up 1.54%, and within the Magnificent Seven, NVIDIA is the clear standout, surging 2.64% pre-market. Tesla is also adding 1.25%. The laggards in that group are Amazon down 0.43, Apple and Microsoft both off 0.24, so it is a split tape within mega-cap tech, with semiconductors and electric vehicles carrying the weight.
And on the other side of the ledger, healthcare is the weakest sector, down 0.72%, which adds a slight defensive undertone to the overall picture. Investors are clearly rotating toward high beta growth names this morning, likely driven by macro optimism, but that rotation also means the rally is concentrated rather than broad, and concentrated rallies at the top of an expected move range with max pain far below deserve some healthy skepticism.
Bottom line for the Dark Gamma community this morning, the SP 500 opens in a bullish gap, but we are right at the upper boundary of the expected range at 7,432. Max pain at 7,340 acts as a long-term anchor for the session. Watch implied volatility carefully as the day progresses, and keep a close eye on whether technology can hold its gains or whether profit-taking starts to drag the index back toward the midpoint of the range. It is shaping up to be a high-stakes open. Stay sharp out there. On the economic calendar, there are no high-impact data releases scheduled for the United States today.
A quiet macro day. Focus on institutional flow and key technical levels on S&P 500.
The Magnificent Seven are showing a mixed picture in pre-market, with the group broadly split between modest gains and slight pullbacks heading into the open. The overall tone leans cautiously constructive, but there's no clear conviction sweep across the entire tech cohort.
NVIDIA is the standout leader, up 2.64%, continuing its momentum as AI infrastructure demand keeps institutional buyers engaged. On the other end, Amazon is the laggard, slipping 0.43%, with Apple and Microsoft each down a modest 0.24%, suggesting some rotation pressure on the mega-cap software and hardware names.
Tesla is holding a respectable 1.25% gain, which adds a risk-on flavor to the session, while Alphabet's fractional rise and Meta sitting flat signal that advertising-heavy names aren't seeing much pre-market catalyst today. The news flow isn't offering much of a direct tech driver either. The EU jet fuel supply commentary is more of a macro energy sidebar than a sector mover.
What stands out is the divergence within the group. NVIDIA pulling meaningfully higher while the rest consolidate points to a semiconductor-led narrative rather than a broad tech rally. Traders will be watching whether NVIDIA's strength can lift sentiment across the others once regular trading kicks off.
Alibaba dominates this morning's pre-market earnings slate with a $311.2 billion market cap, a beta of 1.20, and an expected move of 5.4%. Consumer cyclical names at this size can swing the broader tape meaningfully. Nabius Group and Deutsche Telekom are also reporting but are secondary in scale.
That 5.4% expected move on Alibaba is notable given the recent macro noise around trade, and with beta just above 1, options pricing feels fairly disciplined rather than fearful. Traders will want to watch whether the print confirms or challenges the current risk-on tone following the US-China tariff pause.
Shifting to tonight's after-hours session, Cisco Systems takes the headline spot at $392.2 billion in market cap with a beta of 0.91 and an expected move of 6.8%. That implied move is actually elevated relative to its low beta profile, suggesting the options market sees real uncertainty in the guide. Manulife Financial and AES round out the evening but carry far less market weight.
6.8% on a sub-1 beta name like Cisco tells you the gamma exposure into tomorrow's open could be meaningful if the print surprises, particularly with 0 days to expiration players active in the SP 500 around tech sector open interest clusters. Tomorrow morning brings Brookfield at $82.7 billion leading the next session, with Applied Materials after the close commanding $342 billion and another 6.8% expected move worth positioning around tonight.
Starting with the macro backdrop, the EU Energy Commissioner's reassurance on jet fuel supply removes a tail risk that could have pressured airline stocks at the open today.
Exactly. And with that uncertainty off the table, we could see some relief buying in travel and transport names, which had been carrying a geopolitical risk premium.
Shifting to the dividend announcements, TransUnion declaring 12.5 cents per share and Atmos Filtration confirming their quarterly payout signals management confidence, which tends to attract income-focused flows into those names early in the session.
On the broader tape, dividend confirmations like these tend to support defensive positioning, so watch the SP 500 open interest clustering around current levels, as gamma exposure near those strikes could keep price action contained through the first hour of trade.
Today's market debuts. Going public this session, Fervo Energy Co., GMR Solutions Inc.
An IPO is when a private company sells shares to the public for the first time. These events can be extremely volatile, especially in the first trading sessions.
Check the offer price and the available float. Day one moves can be very wide, size accordingly, and manage risk carefully. Digging into the SP 500 open interest picture with spot sitting at 7,425. The 7,515 call is the standout, exploding 9,831% overnight to 22,048 contracts. That kind of fresh positioning makes 7,515 a hard resistance ceiling heading into the session.
And the 7,600 call is not far behind, with nearly 7,000% growth to 36,267 contracts, so dealers are stacking gamma exposure across a fairly tight band from 7,500 to 7,600. Both levels should act as a layered resistance zone that could slow any upside momentum considerably.
On the put side, the nearest meaningful open interest sits down at 7,215, which surged 4,658% to nearly 7,800 contracts. But that strike is over 200 points below spot, so it is not offering close-in support. The more relevant floor is probably defined by max pain at 7,340, where gravity tends to pull price into expiration.
With put-call ratios running between 1.8 and 2.7 across all three near-term expiries, the options market is heavily skewed toward downside hedging, which tells us institutional players are not fully trusting this rally. Watch for the 7,500 to 7,515 band as the key battleground today, because a clean break above that cluster could trigger dealer hedging flows that accelerate the move.
Diving straight into the levels, the gamma flip at 7,357.7 is the price where dealer hedging behavior switches from stabilizing the market to amplifying moves. Since spot is sitting at 7,425.5, we are currently above the flip, meaning dealers are in positive gamma territory and will buy dips and sell rips to stay hedged.
And that ties directly into the call wall at 7,450. That is the strike with the heaviest call open interest, where dealers are short gamma and will aggressively sell into any rally approaching that level. Think of it as a ceiling that will be very hard to punch through on 0 days to expiration contracts.
On the downside, the put wall at 7,350 is where put open interest clusters the heaviest, acting as a floor because dealers must buy futures to hedge as price falls toward it. With spots sandwiched between the put wall and the call wall, the gamma exposure profile suggests a range-bound, mean-reverting session.
The open setup is essentially a 75 to 100 point corridor, with dealers mechanically fading moves in both directions, as long as spot holds above the gamma flip. A break below 7,357.7 flips the dynamic, and dealers become pro-trend, which could accelerate any move toward the put wall fast.
Big money leaves traces. The highest liquidity concentration over 1 year sits at the 7,431 level above current price, with maximum liquidity concentration over 1 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 7,431 level above current price, with maximum liquidity concentration over 1 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
Here is the complete level map for today's session. S&P 500 is at 7,426, above the gamma flip at 7,358.
1 sigma range, 68% probability, goes from 7,370 to 7,432. 2 sigma, 95%, extends from 7,338 to 7,464.
On the GEX side, call wall sits at 7,450, structural resistance. Put wall at 7,350 is where dealers become forced buyers.
The top institutional whale levels nearby are 7,424 and 7,428. These are the highest liquidity concentrations in the market. Expect reactions there.
Breaking activity on the institutional scanner today, with 27 large entries flagged across the options market. The headline flow is concentrated in 2 names, NVIDIA and Tesla. Starting with NVIDIA, the single largest print of the session is a call position at the 200 strike expiring December 2028, commanding a premium of $92.38 million, with nearly 8,849 new contracts in open interest, executed at 98.9% of the ask. That is an extremely aggressive fill, Billy.
Absolutely, Samantha. And NVIDIA does not stop there. 2 additional call blocks were detected on that same ticker, one at the 210 strike expiring May 2026 at $23.7 million in premium, and another at the 230 strike for June 2026 at $23.35 million. Combined, NVIDIA alone represents over $139 million in total premium flow today, all of it in calls. The semiconductor sector is clearly the epicenter of today's institutional positioning.
On the other side of the ledger, Tesla stands out as the only put side entry among today's top detected blocks. A put position at the 430 strike, expiring September 2026, drew $51.06 million in premium, with over 11,166 new open interest contracts. The ask fill came in at 65.9%, suggesting a more measured execution compared to the NVIDIA prints, but the notional size still ranks it among the largest single entries of the session. Consumer discretionary and electric vehicles getting notable attention on the defensive side.
So to summarize today's institutional scanner, flow is heavily skewed toward calls, with the technology and semiconductor space, led entirely by NVIDIA, absorbing the bulk of premium. Tesla represents the session's most significant put entry, standing as the sole counterweight in an otherwise call-dominated tape. Worth noting that 0 previously detected contracts reached the open interest confirmation threshold of plus 20% today, meaning all the conviction is coming from fresh positioning. We will continue monitoring these levels as expiration dates approach.
Breaking institutional flow alert from the dark gamma scanner. A new contract entry has been detected today on NVIDIA, ticker NVDA. The instrument is a call option with a strike price of $200, set to expire on December 15, 2028. Total open interest on this contract currently stands at 23,290 contracts.
Thank you, Samantha. Looking at the flow magnitude, the scanner registered a volume of 11,351 contracts at the time of detection. The institutional average entry price on this contract was recorded at $81.38 per contract. That brings the total premium flow registered to approximately $92.4 million entering this single position.
Now here is what the scanner flags as a key structural note. The current contract price is $81.35, which places it just below the institutional entry price of $81.38. In dark gamma tracking methodology, when the current contract price is at or below the institutional entry level and open interest holds steady or grows, that configuration is classified as an ideal tracking setup. In this case, open interest reflects 8,849 new contracts added, confirming accumulation activity at this level.
To complete the data picture, the underlying break-even price for this contract at expiration is $281.40 on NVDA shares. That figure is derived from the strike price of $200 plus the average premium of $81.38 per contract. This has been your Dark Gamma Institutional Flow Report. All data is observational and for informational purposes only.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.